we only went through 2 of the topics in September, so we are going to view the others today. I'm here with my colleague Mario Dominguez, who will be your host for today. You will mostly hear me because Mario is having a flu, but he'll back me up here, and I also have some of my other colleagues to jump in for your questions, so please do not hesitate.
Yeah, Kata, thank you very much. I'm here, okay?
Good to have you, Mario, always. All right, so the topics for today will be how to apply an extension in Nakisa. Then we're going to look at adding a new company code in the master data configuration. This is a topic that we've seen in some of our very first sessions of office hours, but since the public was reduced, we thought it's a good idea to review it and go through the topics. We left the session for questions and answer at the end, and I have some follow-ups regarding the effective date, one of the topics that we've seen last time. So now let's start with the first topic, how to apply an extension in Nakisa. While I might not see the comments, please interrupt me, and the question, please interrupt me if you have any. So, applying an extension in Nakisa. So first of all, the extension is just a prolongation of a contract's terms and condition. And a quick note here that it might require some judgment whether this is an extension, this is something that you can extend, you can apply to extend an existing contract, or if you need to create a new contract altogether. As I was mentioning, this is something that your accounting team might need to judge, whether the nature of the extension, it's really what you need to use in terms of the terms and conditions that you have available in Nakisa, or whether this qualifies for a new contract for a new asset. A contract can have one or multiple extensions. You can add them from the very beginning or through the life of the contract. You can add them as likely or unlikely to exercise. You will see, and we'll talk about it, you can use either base rent or extension to do that. You can change the likelihood of exercising through the life of the contract or the term of the extension itself. The terms and the condition of the contract may be different to a certain extent from the base rent, from the initial base rent. And one thing to keep in mind is that once you exercise the extension, that will increase both the value of the right of use asset and your liability. To that purpose, as I was mentioning earlier, your accounting team needs to consider whether the nature of the extension qualifies for the use of this term. So, for example, if you have a renting contract for one floor of the building, but then you continue the contract and instead you are moving to a different floor, and it's a continuation of the contract because from a commercial point of view, you are dealing with the same vendor, but you're changing floors. Now, from an accounting point of view, this may be an entirely new contract, but it really depends on your rules, on your policies. So this is something that your accounting team needs to advise the users on whether they need to create a new contract or they can apply an extension. So now moving into the specifics of the term. So of course, we are dealing with an active contract and we are applying a lease modification, and this can be done from the main menu. We are entering the information in the first window, and first of it is the amendment date. You might remember from last time as we went through different dates in Nakisa, the amendment date, it's not a date that has any implication in the calculation or any financial implication. It just indicates when the event takes place and can be set to any date. Then you need to choose a reason code. In this case, you are actually adding new terms, so the reason code that qualifies for this is the new term. If you need to modify the contract rate, and this again, it's an information that you need to have from your business or accounting team. you have the choice of adding yes or no here. So you have this little case that it's a yes or no one. Then in the description, you can add something for you to follow up later, but this is not a mandatory case. Once you do that, the system will create a draft, and you might remember, and for sure you know that you are following the little pencil in order to apply the modification. And in the latest version, we have this color coding where the draft is emphasized in a new color. In the draft, you can add the new term by clicking the Add New Term button, and you need to choose standard term. Within the standard term, you can either choose base rent or extension. Remember that base rent will always be likely to exercise, so you don't have the choice of unexercise it at the AG level, but for extension, you can do that. Now, there are a few things that you need to consider here is the amount frequency, the payment frequency, and so on. There are some things that you can set differently than the base rent. And these are the amount frequency and the payment frequency. For the payment frequency, we have a switch in the back and in the settings part of the manager page that will help you if you need to have different payment frequency for different rents, for different terms. We're going to go through the exact section, and I'm going to show you how you can do that. Of course, one of the things that you can't change is the day, the first payment day, because it has to be the same as the first term, the first base rent. Then once you approve the terms at the contract level, you can move to the AG level, where, as I was mentioning earlier, base rent is always likely to exercise. But if you choose extension, you can either leave it unexercised. If, for example, you just wanted to add the term, and you can have an event that has no financial impact, or you can choose to exercise it at the same time with the addition of the term. And of course, we jump into the effective date. And you might remember last time we talked a lot about the effective date. Just a quick reminder, the effective date needs to be in a period during the life of the contract, in a period with no posted transaction, and it has to be on or before the start of the new term. So then, once you apply the effective date, you have the chance to look at the schedule, looking for the green line, looking for the reasonability of the assessment of the delta. If everything looks fine, that you can complete the draft. And once the draft is completed, you can also see the transaction. Of course, we always recommend that you, if ever it's a very complex scenario or something that you are not very familiar with, that you do this in your QA environment, and then you come to your production and do it in your live environment, so you don't have any problems in case you change your mind. But as long as the draft is not merged, you can always delete the draft and it can always start over. So this is the theory part. Now we can jump into the more practical approach. So I'm switching to the instance, and please let me know if you continue to see my screen. I'm guessing yes.
Yeah, we can see it.
Thank you, Ada. All right, so I have a contract that's already active, and it has the terms and conditions that are ending at the end of 2022. And during the life of the contract, so now we are in October, I have the information that I can extend the contract. I can apply an extension. My accounting team already advised me, yes, this is an extension. We need you to apply that. So I can do that from the contract level. So I can start at the contract level from the main menu. I can choose lease modification. So I have my little window here with the information that I need to fill in. And the first information is the amendment date. Now, being in October, I can start with the 1st of October. This is but just as easily I can leave it to the 17th if this is something that will help me track later the event. So this is really up to you whether you put the date and you just consider the month, the period, or you just put the current date if ever you have some other indication in your internal policy. So I can do both just the same. In the reason code, and you can see here we have a lot of reason codes. Therefore, for different types of modification, in this case, we are actually adding a new term. So addendum to contract new term is the one that qualifies. The modified contract rate, if the case is on, in this case is yes, then you have the choice of including a new contract rate. If it's an IBR, you will still have that choice at the AG level when you click on the send to assessment and you have to choose the effective date. But if you do not need or do not want to change the contract rate, then you can simply uncheck the case. So then the extra field about the contract rate will disappear. And then you have the description that can be something very simple like addendum to contract. You can put maybe the name of the vendor, or if you have the actual addendum number, you can put them here. So you can say number 2 from 2022, or everything that you might need later. So I can click submit. And at this point, the system will be creating the draft for me to work in, for me to add the new information. So this is something that happens with every term that you are adding. And as I was mentioning, if you are in one of the latest version, you will notice this nice color coding. You always get a new color tab for the draft, and you can follow very easily that you are in a draft because you got this extra information about the version, as opposed to the master contract that will look like this. So we are definitely working in the draft here. And now we'll be following the little pencils, and we need to go to the lease component level and add the new term. And in the terms and condition, we have the add new term button that is available, and I can click on it. And for the extension, this is part of the standard term. So in the standard term, you have either base rent, extension, supplemental, and reduction. Remember, I was saying if you choose base rent, the base rent will always be likely to exercise, whereas extension, it's a bit more flexible. It gives you the opportunity to set it likely or unlikely to exercise. So in this case, I am going to choose extension. So I have an extension, and let's say based on the renegotiation, I'm paying a little bit more. And now we're getting into some of the fields that I can set differently versus my initial base rent. And one of the things, first of all, that I wanted to show you is that in this case, you can see my payment frequency. I can choose something else versus what I had in my base rent, the initial base rent that was monthly. And this is because of a setting in the back end. So I'm going to go to the back end in the settings, in the accounting settings. And there is a little switch here that will allow you to have different payment frequency or not. And this is the one, enable same payment frequency for terms. So if this is on, if this is something that it's based on your accounting policies or other type of rules that you have internally that says that every term should follow the same payment frequency, you can turn this on. So this will force the user to always choose the same payment frequency. In this case, in this instance that I'm using for demo, this switch is off, so I can choose a different payment frequency for the new terms if that is the case, or if it's based on the contract details. Now, I had a few questions last week about new topics to present in the office hours, and I thank you all very much. They were about amount frequency, payment frequency, and payment dates. We plan to have a more extensive topic related to all the terms and conditions that we have in Nakisa. So we'll do that in November. But I'm going to take the chance now to talk about amount frequency and payment frequency because I had that question. So the amount frequency is really the calculation base for your lease payment. It's just determines how frequent the amount rent is applied. And you will notice here that you have 4 choices. You have day, month, one time, and year. One time means that it doesn't matter how frequent you pay for that period. It doesn't matter how many days you have in that period. Each time you're going to have one amount to be applied. So if you have one time monthly, it's going to be 125,000, or if it's one time quarterly, if it's also going to be 125,000. Now, if you're going to amount frequency like day, of course, this will take into consideration the number of days in the period. So if you have 125,000 per day in a monthly frequency, then of course your total amount per month will be 125,000 multiplied with the number of days. Now, month and year are functioning a little bit in the same way because they're taking into consideration the number of days. So the month one will always look into how many days you have in a month, meaning that in February you'll probably pay a little bit less versus if you look at July that has 31 days. And year we'll also consider the same approach. We'll also consider the number of days in the period selected. Of course, hand in hand with this, and there are some other terms that will trigger the total amount that you see in the schedule. So, for example, the 360 convention, they will have also an influence on how the calculation is made. As I was mentioning, we plan to have a larger topic regarding the terms and conditions, but I just wanted to explain a little bit about the amount frequency. Now, the one that we recommend the most is the one time, because in a lot of situations you have a fixed amount to pay for a specific period, either month or quarter or year. It's less frequent that you have other type of amounts, but I do encourage you to use them, to test them, to see if your schedule is the one that you intended, is the one that is mentioned in the contract. So in this example, I'm choosing one time for the payment frequency. As I was mentioning, I can go with a different payment frequency. I can go with a quarterly approach versus what I initially had, monthly approach. Now, the first payment date, it has to be on or after the terms and conditions start date. And then terms and conditions start date need to be immediately after the end of my previous term. So my previous term is ending in December 31st, 2022. So I absolutely have to start on the 1st of January, 2023. Then my end of the term should be based on the contract. So let's say we had an extension for a full year. So once I filled in this, I can go back to my first payment and my last payment. So first of all, my payment day will always have to be the same as the initial term, the base rent. So I know it has to be the first, and then I know it has to be on or after the start of TNC. So I can leave it January 1st because it is on the start of my terms and condition, and it is the same as the one that I had in the base rent. For the last payment date, as you might remember from last time, this is just a cutoff. So I can simply use the end of my terms and conditions. So I can I don't need to put the actual payment date into this extension. I do have a message here. Okay. Oh, I put 2022 in here, so I need to put 2023. So this is my 12 months. So this is my 12 months, and my last payment date can be the same as the end of the terms and condition. So with this, I corrected the error message that I was seeing. My error was that I was choosing 2022 instead of 2023. My intention was to have an extension of 12 months. So now everything is filled in. I no longer have any error messages, so I can click on submit. So I have the term here, and at this point I can approve at the contract level. I can send it to approval and approve. I have power user role, so I can go through all the steps. And now following the pencils, I can go to the account activation group level. And remember, if it's a base rent, it's always likely to exercise. And I have an example here that I wanted to show to you, that if you're using a base rent, then the base rent will always be likely to exercise. So coming to the AG, this is no, it's not my example. $195. This is my example. Okay, so if instead of extension, I am using a base rent, the base rent will always be likely to exercise. So I can't unexercise it later or as I'm getting to the activation group. So now I can go back to my example. My example is this one. I'm opening the draft and I am looking for the activation group, and I have my extension here that it's on exercise. So now I can click exercise and send to assessment. One mention here, all the transactions are posted up to the end of September. So my first open period is October. So you will notice that if I'm trying to go earlier than October, I cannot. I have the the interdiction sign, and in October I have already selected in green the available dates. These are the start of my accrual period is the payment day. So these are the ones that I can select for my effective date. Now, as you can see here, the term is set to start in January 2023, but I want to have the effective date on the 1st of October, in the period of October. So I can choose October 1st. Just one note, we're going to talk a little bit at the end as a follow-up on the effective date. We're going to talk about period lock. It was one of the questions that came last time, so I want to clarify one point there. So effective date is October, so I can click submit. If ever you chose modify contract rate and you are using the IBR, in that window that you just seen, you have the option of updating the IBR. So now in the draft, the schedules have been updated, and it's my chance to look at the schedules. So I can choose all columns and I can choose all years, because I want to make sure that I have the intended effect with my extension. And I'm looking for a green line that will indicate the modification I'm looking for, and you can see it here. It is in October 2022. And as I'm scrolling to my right, I am looking for the deltas, the modification in both asset and liability. So I'm expecting to see an increase. I'm extending my contract. I'll have more periods, and also the amount that I'm paying will be higher. However, I'm changing the frequency here. So I'm going from monthly payments to quarterly payments. So I do expect to see that change in frequency, and I do see it starting with 2023. Then I'll do a few other checks, checking that my NBV is falling to 0 at the end of at the new end of the contract, so which is 2023. I'm also checking if my liability is ending up being 0 at the end of the contract, and I was expecting to see an increase. I see an increase. It does seem like the right amount, so I'm happy with it. So I can go back and approve this change. I need to click on confirm classification, but this is merely for workflow purposes, so it doesn't have any other effect. So now my draft is active, is approved. Then I can go back at the contract level and complete my event. So I'm clicking on complete assessment. This will merge the draft version into the master version of the contract, and it will also create a transaction that will show the increase that I'm looking for in both the asset and the liability. Any questions regarding the extension? You still have time to think about it. So now that
no questions in the chat, Kata.
Oh, thank you, Maria. Now that the draft has been merged into the contract, I can also check at the unit level that my transactions are issued. I am using here two standards reporting, so I'm expecting to see for each of the standard modification event. This is on the IFRS, and I'm seeing that, and also I'm looking for my liability side, and also I'm looking to see for my US GAAP the modification. They both should be the same considering the conditions that I have, but it's something that you might want to check. Always check after you complete the event that you have the transactions here, that they make sense, that they're in line with what you're seeing in the schedules, and you have the correct posting date and document date and so on, and correct being the one that you have chosen. So the event.
We have a question.
Yes.
It's Tisha, and is saying, she's got a question. What about when the effective date is not available?
Can I can explain better, yes. Maybe?
Yes.
When we try to do the extension and then we try to do the exercise, like to exercise, and the effective date is not available in any months. So I usually go to activation group and try to see the last reassessment to put the effective date, but sometimes it doesn't work as well. So what I can do in this case when the effective date is not available, for you it was available the effective date in the first day of the month, but in this case, what can I do?
So Tisa, we talked about the effective date in the last session, and there are a few things to consider about the effective date, as I was mentioning. In order for it to be available, you need to make sure that you are still in the during the life of the contract. So I assume that that was happening for your case, but then you need to consider whether you are in a period where the transactions are posted or not, whether there was a previous event that was already posted for a future effective date than the one that you are looking at, then you need to consider, depending on your terms and conditions, so whether you have advance or arrear payment, or whether your payment is during the month, so you don't have a payment on the first or on the last day of the month. You might need to plan your event more than 1 month before. And I have some follow-ups that because there were some questions last time about the possible error messages regarding the effective date. They're not necessarily error message, as you mentioned, but simply you can't select it. And you saw, like, for example, because transactions were posted up to September, I could not go before October 2022. I would get the no sign, the interdiction sign. Also, I could not choose something else than the first of the month, because my contract conditions are arrears with payment on the first. So that is the beginning of my accrual period. That will always be my available effective date. Then, as I was mentioning, you need to see whether you already have some other events in there, or whether you have some other type of terms and conditions.
Okay.
So Tisa, if you look through all these details, and then you'll figure it out what you need to do. And we're going to talk a bit at the end of the session. Maybe it will become more clear for you.
Okay, we have another one, Kata. It's
Sure.
from Richard.
Yes.
When would you not likely to exercise a term?
Okay, that's entirely up to you, but let's say you have the information in the contract, but you are not sure that you are going to, and I'm using the example I started before with the renting, you're not sure that you are going to stay in that facility for the extension. Then you can choose to only recognize the base rent and not recognize the extension, and only when the probability of exercise becomes higher than you can exercise it. So really, this is a question for the procurement and accounting team, because it depends on the probability of exercising that, and whether or not you are going to continue, you are going to make use of the extension. And yes, that's about it.
Okay.
And then there is no financial impact.
Yes, that's right. If you don't exercise it, there will be no financial impact.
Okay.
You just have it there, and for the extension, maybe it's not something so common, but for example, a termination option or a purchase option, you can choose to enter it, but you don't have enough information to know whether or not you're going to make use of it. So then you just have the term, and then you can reassess it later.
Clear, thank you.
You're very welcome.
And
All
last
right.
one.
Yes.
Do we need, it's from Andrea. Do we need to have all postings completed, payments, accruals, before creating any future modifications?
If you need, there are certain events that do require postings. In a lot of the situation, you are posting the transaction because it's part of your process, because you want to see those transactions in your ERP. Now, if you need, our recommendation is that you do post your transactions, but there are only a few events that require postings, and are the ones that are what we call asset-driven events, like impairment, casualty, termination, purchase option. For the others, you don't really need to have the events, but then you get into other issues. So what I'm saying here is that you need to think about your internal policy. What does it say? Do you need to have the transaction posted or not?
Okay, thank you.
You're very welcome.